We are back with David Burrows. Here are his top picks. Owens Corning topping the list, OC.
So over the last few times I've been here, we've talked about the housing market in the U.S. and the home builders. And this is a sector and a theme that we're very focused in. There's a tremendous amount of pent-up demand. The millennial generation are starting to form families, and new home sales across the U.S. are growing smartly. We've talked about specific home builders like Lennar, who reported great numbers today. We've talked about companies like Sherwin-Williams that benefit in this area, and today we're going to talk about Owens Corning. So about 40% of their revenue comes from roofing, and about 20% of their revenue comes from insulation. The lion's share of their revenue comes out of the U.S. We like to focus on U.S. domestic economy. What's interesting about this is that the insulation market is working at almost at capacity. Owens Corning is the swing producer. They're the ones with capacity that they can continue to sell. And in the last housing market, their margins were twice what they are today. So as supply-demand tightens, prices go higher, their margins grow. In the roofing business is really dependent on new home sales, remodeling, and then, of course, adverse weather conditions. And we are in a secular change in adverse weather conditions, right? We're having a lot more extreme weather, and that creates demand for additional roofing sales.
Damages the roofs.
Damages to the roofs. So if you like the U.S. housing industry, both for remodeling and new home sales, that's the majority of their sales is new home sales. If you think that the U.S. consumer is in pretty good shape, this is a business that has a really dominant market share. Only 25% of their revenue comes outside of the U.S. We like the U.S. domestic housing market, and this is just another way to take advantage of it.
That's interesting. It's a new angle on climate change that is going to cause a lot of damage to the building stock.
It is. That's right.
Or presumably it will if it leads to extreme weather events, all right. Regeneron Pharmaceuticals, why do you like this one?
So we like biotech as a space. It's recently reaccelerated. Regeneron has a number of key drugs. Their major drug is Eylea, which is used for macular degeneration, and it is a multi-billion-dollar drug. However, they do have a newer drug which is aimed at the allergy market, aimed at autoimmune arthritis, and it potentially could be a $10 billion drug. So this is a company that will double its earnings in the next 3 years. It's not dependent on one product. They have the sum of the parts. We think its company trades market value about $50 billion. We think this stock over a 3 to 4 year period could be a double, and it's technically behaving very well in a group that is in favor.
With less than a minute, Microsoft, why do you like them, Dave?
Microsoft I've used before. It is dominant for enterprise relationships. So of the 3 companies that are in cloud-based computing, they're the one with all the corporate relationships. So they are signing up long-term contracts with an enormous number of corporations. Their cloud-based business is growing 93% in the last quarter. The software as a service is growing nicely. They have cost-cutting opportunities. They're cutting 25,000 jobs. This is a great way to play what companies spend money on when they start to do better, technology.
David, always great having you on the show.
It's great to be here.
David Burrows has been answering your questions on Market Call. Thank you very much indeed for watching. The Encore airs Monday through Friday at 10 p.m. Eastern, 7 o'clock Pacific. Market Call tonight is at 5:30 p.m. Eastern. We'll leave you for today, but we'll be back in all our glory tomorrow.